In this week's currency update, it's been an incredibly busy week in global financial markets. That story is going to continue through European trading and into US trading later on tonight. No surprises, all the focus is on the Brexit vote, and with one of the UK TV companies, ITV, calling the result to Brexit, we've seen intense volatility in financial markets. Now, I was in extra early this morning, well before polls closed at 7 a.m. Sydney time in the UK, and the mood was fairly upbeat. Indeed, unofficial exit polls suggested a 52% vote for Remain, and turnout looked like it was going to be very high. Markets reacted well to this good news. The pound trading above 150 versus the US dollar for the first time since December, and the Australian dollar above 76.40. However, as results started to come in northeast England, the mood changed. Newcastle, with its large student population, was supposed to be heavily for Remain. It wasn't. And Sunderland came in at 61% for exit, a surprisingly large margin. This was the first indicator that things were not going well for the Remain camp, and the mood soured quickly, the pound dropping below 145 and 143. With unofficial results in, the pound has dropped below 135 for the first time since 1985. Now, UKIP leader Nigel Farage has just suggested that dawn is about to break on a newly independent United Kingdom, but these events will cast a long shadow on global financial markets for some time to come. And remember, last week I noted that this is not a binding referendum. What will be key is what Prime Minister Cameron says when he faces the press later on today. Clearly, it looks like the UK has voted for exit, but it's not clear what happens next. The UK will remain a member of the European Community until an Act of 1972 is repealed, and it could take some time for that to happen. At least for the moment, there are probably more questions than there are answers, and we need to watch events over the next 24 hours very closely. We should also expect to see significant volatility in other markets around the world. The Australian dollar, having traded above 76 this morning, has traded close to 73, and further losses next week look likely. We'll also need to watch reaction from central banks around the world. One central bank to watch very closely will be the Bank of Japan. Dollar-yen having traded below 100 for the first time since December 2013. I would expect to see announcements from central banks about liquidity swaps being opened, and clearly we want to hear soothing words from those key G7 central bankers as the day progresses. Commentary from European officials will be key here as well, remembering that Article 50 of the Lisbon Treaty requires a negotiated exit of the UK from Europe. While Brexit will remain a key driver for global financial markets, we have to remember that next weekend we have our federal election. And looking into later on this year, we also have the US presidential election. I tend to see these as a wall of worry that global financial markets will have to climb. And unfortunately, we've clearly fallen headfirst over the first risk event. These are all factors we can talk about in next week's currency update.